Hello, my name is Steve Bigelow with the Candlestick Forum. There's some very observable situations in the market. One, we can see that after the Fed announcement, where everybody expected a 3/4 point increase, they got it. What did that do to the market? Well, it seemed very favorable. And the additional confirmation was this uptrend stayed above the T line. Now, the reason we look for targets is this market's been in a consistent downtrend for the last 6 months. It looks like it's trying to do a double bottom. However, until they can get to a new high, even though this J-hook pattern looks pretty strong, until they can get to a new high without seeing selling, this overall downtrend remains in progress. So it will be important to see what happens over the next few trading days at this level. Same scenario on the NASDAQ. However, the NASDAQ is even a more powerful uptrend indication. Look at your kicker signal, J-hook pattern. The kicker signal itself implies a very strong uptrend, and the fact that they continued up through this level allows us to kind of extrapolate that if this is wave one, wave two should take you through this level, which would be a strong indication that the downtrend might be over, that we're still heading or have more potential to get to the upside. Also, we've got some very bullish indications. After hours, Apple confirmed, beat their earnings, and they took it up after hours through the 200-day moving average after this little J-hook type pattern. Same scenario on Amazon. Little inverted hammer, J-hook pattern. Big earnings increase took us through this level. This implies that Amazon is going to have a lot more strength in it. Now, why is that important? Because if everybody's confident that the biggies like Apple, Amazon, Tesla, NVIDIA are all trading up, that means obviously bullish sentiment has come back into the market because those are the ones everybody keeps their eyes on. Whoops, that's not what I wanted. So NVIDIA, you can see it did a J-hook pattern, closed up near the top end of the trading range today. This makes trading very simple. If this opens positive tomorrow, we've got a high probability prospect of a doji sandwich, meaning this candle right here will be an equivalent to this candle right here, which already demonstrates they could probably get up through the 200-day moving average, which everybody will be watching. And again, it was expressing that there is a bullish sentiment in this market, that the bears are kind of out of the way. So we look for these strong signals. We recommended wire the other day because look at the J-hook, more specific, bobble breakout. Notice the J-hook pattern set up, and then they gapped it up through the resistance level and went positive. We know this produces an extremely high probability that not only are you going to be in an uptrend, but a very strong uptrend. Because everybody, we're watching the J-hook pattern, we're watching what it does at the T-line, or bouncing off the T-line. Everybody else is watching what it's going to do with the 50 and then the 200. We're getting in immediately, knowing that the probabilities are that they're taking it much higher. Same scenario on ENTG. Look at your J-hook pattern supporting off the T-line, best friend signal, gapping up through the 50, which everybody is watching, and went up through this downtrend. If you're buying this one on positive trading, anticipate wave one, wave three can take you pretty close to the 200-day moving average. Right now, if they start taking the NASDAQ up further, that's a good indication. Wave three is in progress. The bullish sentiment is back in the market, and it's breaking this consistent downtrend with going to a new high level above here. So essentially using, again, 45 years of investment analysis and seeing that the trend is starting to move to the upside gives us much better prospects that we want to be bullish at this point in time. That'll be it. We'll see you in the chat rooms.